All right, everybody, welcome back for another deep dive.
Yeah, let's do it.
So for today's deep dive, we're going to be looking at 2025,
Okay.
specifically interest rates
All right.
and how they might change and what that's going to mean for your money in 2025.
Cool.
Yeah. So we found this CBS News article that
Well,
kind of lays it all out, gives some predictions about where interest rates are headed.
interesting.
So we figured we'd dive into that and kind of unpack it a little
You
bit.
have to.
So first off the bat, the thing that people are probably most interested in is mortgage rates.
Sure.
Are they going up? Are they going down? What's happening?
Right.
So CBS is suggesting that mortgage rates are likely to climb in 2025.
I see.
Now, why is that?
So a couple things. One is the economy. They're expecting a strengthening economy,
Okay.
which means there's going to be higher demand for loans.
Oh, makes sense.
And then also the potential for inflation.
Oh, so inflation's coming back.
Well, it's always something to keep an eye on. When prices rise, lenders want to make sure that their returns keep pace. So they're
Yeah.
going to raise the interest rates.
So what does that mean for like the average person who's thinking about, maybe buying a house this year or next year?
Well, if you're thinking about buying a house, it means that you're going to want to do your research, plan ahead,
Yeah.
explore different loan types,
Oh, yeah.
maybe even think about getting pre-approved.
Oh, yeah, that's a good point.
And, consider locations where housing costs might be a bit lower.
Right. So maybe if you're thinking about buying in a super hot market, maybe think about somewhere a little bit less
Yeah.
hot.
Exactly.
So it's not all doom and gloom,
No.
right? Because
Right.
higher mortgage rates, obviously not great for people who want to take out a loan.
Right.
But on the flip side of that, we've got CD rates,
Yeah.
which are potentially going up.
And that's good news for savers.
Right.
So we're looking at CDs or certificates of deposit becoming a really nice option in 2025.
Yeah. Because they pay a higher interest rate, right?
Right.
And CBS is suggesting that those are going to keep going up.
Yeah, because banks want your money.
Oh.
In a strong economy, they want your deposits. So they're going to be
sure.
competing by offering higher interest rates.
So they can loan out more money, I guess.
Exactly.
So for somebody who's got, they're not ready to buy a house yet, maybe they're just trying to save up a little bit of money.
Right.
CDs might be a good place to park it.
It could be really smart to look at those CD rates and think about maybe even something called laddering.
Laddering.
Where you spread your savings across CDs that mature at different times.
So like one that matures in a year, 1 in 2 years, 1 in 5 years or something.
Yeah, exactly. So you're maximizing your returns as rates continue to climb.
Oh, that's a really interesting strategy. I've never thought about that.
It's a good one.
So we've talked about good news and bad news. What about more bad news?
Well, there's always more bad news, right?
Always. Yeah.
Let's talk about credit cards. So credit card interest rates are also expected to rise in 2025.
They never go down, do they?
It seems like it, right?
It seems like they just keep going up.
Well, it's all tied to that overall interest rate environment, and that's something that the Federal Reserve steers.
So if the Fed raises rates, credit card companies just follow suit.
Pretty much, yeah.
So managing that credit card debt is super important.
Absolutely.
When rates are going up,
You don't want to let that debt get out of control.
what are some ways that people can stay ahead of that?
Well, the best thing to do is aggressively pay down those balances.
Okay, so just, if you've got extra money, throw it at the credit card.
Exactly. And if you can't, maybe look at a lower interest option,
Okay.
like a balance transfer,
Oh.
or even a debt consolidation loan.
Okay, so kind of consolidate all your debt into one
Exactly.
potentially lower interest rate loan.
Exactly.
Cool. So we've covered it all.
I think so. Higher mortgage rates,
Higher CD rates.
higher credit card rates.
It's a mixed bag.
It is a mixed bag.
But there's a lot to keep in mind.
Absolutely. And, we've talked about mortgages, CDs, and credit cards.
Right.
But these interest rate trends, they're going to have ripple effects across the whole economy.
Oh, yeah, that's a good point.
Think about car loans, student loans,
Right.
even the stock market.
Yeah, it's all connected.
Exactly.
Yeah.
So as we move through 2025,
Stay curious, stay informed.
stay ahead of the curve.
You got it.
Awesome. Thank you so much for that deep dive.
My pleasure.
That was really insightful.
Glad to hear it.
And we'll catch you guys next time
See you later.
for another deep dive.
Bye.